You're watching News.Markets. Alternative financing channels have made it easier than ever to invest in private companies. But what about getting cash out? Sometimes investors want a way out, but there's no IPO or sale in the mix. There's £300 billion of wealth locked up in private businesses in the UK, according to Asset Match, an online marketplace for buying and selling shares in UK private companies. Stuart Lucas is the co-founder, and he joins me now. Now, thanks for coming in. Now, trade sales or IPOs, those are the usual exit routes, aren't they, for small businesses? Where do you fit in?
Statistically, that's not a high number, the trade sales and the IPOs, and a lot of companies stay private because their longevity, they have no need to, they're doing what they want to, they don't need to trade sale or IPO, but sometimes they have numerous investors on their shareholder register that do want some liquidity, and that's where we fit in. So you've mentioned 300 billion, that's across 2,500 companies that we've identified, encompassing probably 500,000 investors, which is without the new generation of crowdfunding investors, which is a new phenomenon.
So you're shaking up the way that private shares can be bought and sold? Yeah,
it's born out of instances that happened in the past where gestation periods lengthened, and after the crash in 2000, it took a lot longer to exit a company. What we do is bring buyers and sellers together electronically. We're fully regulated, we're transparent, we're anonymous, and we're arm's length. So it's there's slight elements of eBay. Some people will recognise the IG.
So you're a secondary exchange?
Yep. That's where we're
heading.
Why
wouldn't a small business who wanted to increase liquidity, why wouldn't they list on AIM or one of the other junior exchanges?
It's incredibly onerous. There's quarterly reporting if you go on AIM. It's £350 typically to £500,000 to go on AIM, a little bit less to go on ISDX. But it's an old style of doing things where it's risk capital from the market makers, which doesn't really exist since the crash in 2008.
So it's all about embracing new technology and new ways of doing things.
We bring buyers and sellers together. There's no market maker bid-ask price to pay. It's similar to the art house, auction house world where buyers and sellers meet and they sell and they buy at the same price and they pay a small commission either side, and that's how we make our money.
So talk me through a few of the companies who are doing this right now.
I guess the one you'd recognise is Brewdog. And they came to us. They'd promised, we think they were very foresighted. When people are raising money, we think they should include a definitive exit, such as us. They typically say trade sale or IPO, but statistically that doesn't happen. Whereas we could be very predictable for them. So Brewdog, West Berkshire Brewery have also come that route. But Brewdog had promised their investors liquidity, and we had an auction for them last November. 220 of their shareholders participated and 120 of them were successful in buying and selling shares. So we're very proud of that, and I think they are too.
But ultimately, investors want to know they're going to get a return on their investors. So what would you say to a rookie investor who's keen to get involved in share dealing? How can this benefit them? Well,
it allows people to look at the companies on our platform, and in effect, they are later stage de-risked private equity. You don't have the risk associated with a startup because our companies are typically 5 years and longer. So when does a company go bust? Sadly, it's normally in the first 1 to 3 years. So our longer dated companies, our longer aged companies, if you will, are largely de-risked, and people know that they're buying discounted shares without the risk.
So a useful option then for businesses who are looking to increase liquidity for investors without increasing all of that investor relations.
Absolutely.
Stuart, it's been a pleasure talking to you. Thank you very much. Stuart Lucas, the co-founder of Asset Match.
Thank you.